Welcome back to the channel, guys. So, on the last video, we looked at the nature of the market and how the market moves. We saw that the market moves in two phases, that's impulsive and corrective phases. The market normally impulses, corrects, impulse, corrects, impulse. So, and as it is making those impulse and correction, it is creating patterns. Through these patterns, if you're familiar with these patterns, you could be able to capitalize on them and profit. So, today we are going to look at some of the examples that we looked at the last video, the patterns. If you have not watched the previous video, you can go and watch it so that you can familiarize yourself with the patterns. So patterns are on every time frame. From you can see as you can see here we are on the daily time frame. If you go down to the 4 hour time frame, which you will go to the 1 hour time frame, you will find patterns on every time frame. Even if you go to the lower time frames, 15 minutes, 5 minutes, even 1 minute, there are patterns. So we will look at some of the patterns on the daily time frame. On the daily time frame, I've used red trend lines to show the pattern, and on the 4 hour time frame, I've used blue trend lines. On the 1 hour time frame, I've used black trend lines. I've not marked all of the patterns, but just some of the patterns to give an example. As you can see here, we had a channel, yeah, which is a pattern. Here also we had a channel, which is another pattern. You can see the market correct impulse corrected like a wedge, like a rising wedge. It corrected, impulse down again, a flag, impulse a little, corrected again, impulse, and then another wedge. It corrected going downwards, and then it changed direction. Another one. Now we will go to the 4 hour time frame to see the patterns on the 4 hour time frame. As you have seen, we have patterns on the daily time frame, and as day traders, retail traders, we cannot trade on the daily time frame unless your account is so big. You can see here on the 4 hour time frame we still have pattern, another bigger pattern, patterns. All these are patterns, and inside these patterns you can see this is a daily pattern, but inside the daily pattern we have patterns within patterns. So for us day traders, we normally wait for these patterns which are inside the bigger patterns. Those are the ones that we trade because we cannot trade on the higher time frames. Because if you trade on the daily time frame, you have to wait for so long, so many days for your trade to play out. See patterns, pattern, reversal pattern here, impulse corrected, impulse again, a bigger correction, impulse down, corrected, impulse again, trend back up, and then a double top right here. As you can see, double top. Before it got there, it was forming a pattern which is a reversal pattern. It's impulse down, corrected, impulse, corrected, impulse, corrected, impulse. And now we will go to the 1 hour time frame to show you that even on the 1 hour time frame we do have these patterns. Although on the daily time frame, I started from 2010. These patterns have been repeating themselves from 2010. Now I'll go to 2022 to show you how these patterns are still playing out. From 2010, the patterns were playing out to 2022. Those are more than 10 years. The market are moving the same. It has never changed. Even if you go way before 2010, you'll see that the markets have been moving the same. You can see here. This is a bigger pattern, the blue pattern from a 4 hour time frame. When the market got up there on the third touch, it formed a reversal pattern, impulse down, a continuation, a correction, impulse, another continuation pattern, impulse, and then it changed direction a little. Impulse up, corrected, impulse corrected, it changed direction again. It went back down after forming the double top up here. It changed the direction again. It impulse corrected, and that's basically how the markets move. And as you can see, these patterns, I've already told you, there are patterns within patterns. These patterns within patterns are the most profitable if you manage to catch them, because they move fast and for long. Like here you can see, this was a pattern. First touch, second touch, third touch. If you manage to enter the trade from here with a reduced risk entry, I'll just show you. I was supposed to show you this on the next class, but I'll just show you. If you enter the trade from here and you just be patient and hold the trade to down here, you see you manage to make 8%. If you risk maybe 1% per trade, you manage to make 8% on that, only that one trade. So this guys, these patterns are very profitable, and you see they're still happening even if you move to December 2022, this year, the year that you're on. You'll just see that it's still making patterns, it's moving in patterns, impulse correction, impulse correction, impulse correction. You see, up to December 30th. The market was just moving in patterns. Impulse, correct, impulse, correct, impulse, correct. So guys, you should familiarize with yourselves with these patterns. Another thing to note is some of these patterns will be clear and clean. Not all the patterns, some of them will be clear and clean, and others will be messy. So for you to get these patterns to be clear, to come to master them, you have to backtest these patterns so that you can familiarize yourself with them. So that when you see a messy pattern, you are not hesitating to enter a trade. You have to realize that sometimes they'll be clear, sometimes they'll be messy. And also you have to realize sometimes it might be a pattern, not all trade, you'll not win all trades. The pattern might be clear and clean, but the trade might not play out. You end up losing the trade, but don't give up. That should not go into your mind. You start doubting the system, that it's not working. There is no system that it's always correct, that you are never going to win all your trades 100%. There is no system that has 100% performance. I'm sure if you manage to backtest this pattern and you master it, you'll get more than 60% guaranteed if you backtest it. Another thing to note is, as you have seen, if you know which phase the market is on and you see a familiar pattern, you can be able to predict which direction the market will be taking next. So whether it's reversal of or continuation, you can be able to predict which way the market will go next. So guys, this is the end of our video today. On the next video, we'll be looking on how to take this trade, how to enter this trade. We'll be talking about risk management, entry, how to place your stop loss when taking trades on these trades. So thank you guys for watching, and if you have any question, ask below on the comment section, and please subscribe and refer other people to this video, share and subscribe. Thank you.